This program brought to you by eChoice, helping thousands of Australians find the right home loan since 1998.
Hello and welcome to Money Talks, the show that has one really simple goal, and that's to make you richer. And this is the program where I'm going to take you where no money man has ever gone before. I'm going to make super sexy. Let's not be male sexist, and let's compare sexy super to Chris Hemsworth, for example. Sexy enough to make all people, and especially young people, love their super. Let's face it, everyone thinks property is sexy. Who doesn't want to own something like this? But what's the image that you can dream up for super to make it sexy or popular? Here's my argument. If you really understand your super and you boost it up early, you can live it up in your 30s, your 40s and 50s, because you know you have $1 million in today's dollars waiting for you when you retire. So how do you do that? Well, say give up 2 cups of coffee a day, save $10 a working day, that's $50 a week, or $2,500 a year. Slam it into your super on top of your 9.5% compulsory super, and if you are good in a good super fund, you retire with $1 million in today's dollars. I feel like Dr. Evil on, the spy who shagged me when I said that. How sexy is that? To discuss why, well, my proposition, I have Helena Gibson, who's Head of Public Policy and Technical Services from BT, and Amara Haqqani, who is Senior Policy Manager for Investment and Retirement Income at the Financial Services Council. Ladies, thanks very much for joining us. So what do you think about what I've said so far about how we can make sexy super to younger people?
I think younger people turn off super because they think it's not important for them now. Retirement is something that's so way off in the future. Why should I worry about it right now? But the reality is that if we make that about them for today and the incremental steps that they can take today, then it makes it sexy for now.
Helena, what do you think?
Look, I think we just show them what they can have in retirement. We show them what a little bit, as you said, the 2 cups of coffee a day. I've looked at some projections as well myself, and it's the little amounts that you put in early on that make the big difference later on. And I see so many women scrambling at the end to catch up to their male counterparts. Whereas if they had have just started early on, and it's really hard to say when people just finish university, now's the time to just pop that little bit extra in. But I find the way to do it is just to do an automatic direct debit, and you don't even notice it. And you can do that with your fund directly, and you just put that extra $20 in a week. That $1,000 a year could be the difference between having a gap with a male or not having a gap. Okay,
so what I'm going to do is I'm just going to run through some tips that I've come up with, and it will come up on the screen. So I think people need to know what they've got and what they want to have at the end of the retirement, get into the best fund possible for them, put in extra. And I think doing a budget shows you where the money could be that you could put extra in. And of course, don't pick a dud partner. That really can be a real wealth killer. So in terms of those sorts of points, do you think that's the starting point for not just young women, but also young men as well?
For anybody, really. I think that knowing what you've got is really important, and it's probably even best to start with lost super. The amount of people that have accounts that they don't know about. Let's consolidate that.
Because if you find that and you put it in your super, that's a real
all of a sudden you've got more super than you realise you have. Right, we've currently got $17.5 billion in unclaimed super with the ATO. Crazy, that's just way too much money.
What's the biggest out there?
Well, so apparently there is a unclaimed account of $2 million. That could be yours. Could be yours. You never know.
That's staggering.
It's amazing.
Someone must have passed away, and the relatives just don't know it's there.
Yeah, but the important thing is that it's important to consolidate your accounts. It's important to know what fees you're paying, and it's important that all of that marries up to a higher super balance for you at retirement.
Yeah. What about salary sacrifice? Obviously, that's something that you guys will be talking to a lot of your clients about. Do you think there's something that hasn't been sold effectively by government to everybody out there?
Look, absolutely. I mean, it's a tax break for people, a legitimate tax break, so you have the opportunity to sacrifice up to the $25,000 concessional cap each year. If you're on roughly $100,000 per annum, so $10,000 per annum is going in your superannuation guarantee. You've got $15,000 you can salary sacrifice and get a nice tax break on that, the difference between your marginal tax rate and the 15%. And that's an extra couple of $1,000s in your super for doing absolutely nothing but salary sacrificing.
So how do we get through to young people the message that salary sacrifice, building up your super for the future, will all in the end give you the right to enjoy your life in the 30s, the 40s and 50s, because there is going to be a nice lump sum there waiting for you when you retire? What's the message that we should be putting out, and where should we put that message out?
Well, it's funny, I have this conversation with my girlfriends all the time,
Right.
because they come to me as, oh, you know, you work in super,
Yeah.
so, you know, tell us what we should do.
You're a superwoman for them.
Apparently. And the biggest thing I say to them is contribute, especially for young women who are pre-family, like they haven't gone on maternity leave yet. In some respects, that, you know, they reach a certain peak of full-time earnings where now is the time to salary sacrifice, now is the time to contribute, because there is nothing sexier than compound interest at the end of the day. Compound interest is what will get you
independence that comes with it.
Absolutely. And you know, I think back to the plan that had been released, the report that had been released from the government, the husband is not a retirement plan. It's really important for women to understand these issues, that your own super balance is really important, and the way to do that is to start early. You start early, you contribute early. When you're in a scenario where you're working part-time, you've got, you know, kids' school fees, you've got, you know, mortgages to pay off and all that kind of thing. Ironically, the best time to contribute is early in your life, because you reap the rewards later.
And the funny thing, Helena, I find is that young women between the ages of, say, 20 and 30 can be really irresponsible, and they're enjoying themselves immensely. But as soon as they get married, they become unbelievably responsible. You know, they're invariably married to a guy who's still living in his teenage years, and they become like the treasurer, the really responsible, and the person with the vision, and they're dealing with some dopey bloke who's 10 years behind them. So the ideal thing for young women would be to try and get that money as early as possible, and that would actually give them an enormous amount of independence, wouldn't it?
Yeah, absolutely. I think, look, education is key, particularly in high school, in year 11 and 12, and the role of the parent is really important, paramount, because it's at that point, at 18, 19, 20, that the females need to start realising, if I do this now, and all they need to do is to put the figures into a calculator on, you know, the Asset Money website, put it in and show that even if I take a break to have children in my 30s, I will still have enough money in my retirement. And it's playing around with the calculators, and I think that can be fun. And there are some calculators out there that allow you to use more visual type of symbolism, where you can put in an amount and it shows you the type of retirement you'd have. The UK are very big on this, so you know, you might have the swimming pool and the holidays if you've been contributing this amount, an extra, but if you haven't been, it might just be quite a bare existence, basic existence. And putting it visually actually means so much more to people.
Yeah, and in many ways, if we use those sorts of images that we associate with success, like a really nice home, really nice holidays, the fact that you might be in the Mediterranean having a holiday there, all those sort of things are more achievable if you've got this automatic pile of compound interest superannuation building up, and you know there's going to be at least $1 million in today's dollars waiting for you when you retire. Then you should have a more enjoyable life.
You should. You should.
Okay, so I feel a bit guilty here because I own a young woman's magazine called Rush. They've got nothing to do with the quality. My daughter-in-law runs that. But how do I convince my daughter-in-law that we have to get superannuation stories into fashion magazines? Because that's what young women read.
I think it's all about independence. I think we touched on that before. I think today's woman, today's girl values independence, and financial independence is part and parcel of independence as a whole. And the key to security long-term and security in retirement is to start saving now.
Okay. And Helena?
Look, I haven't read the magazine, so excuse me, but is there a finance column in the magazine?
No, it's super cool.
I think that would be a start, and it's really important for young people to start saving, and superannuation is just one element of saving, and that's what we need to bring into the magazine slowly.
Okay, great stuff. Thanks for joining us, ladies.
Thank you.
Okay, so that's our best effort to try and make super sexy. I think we've had a very good start. I must have talked to my daughter-in-law about getting a column, but obviously I couldn't write it. It's too cool for me. Coming up, we have Julia Lee and her stock of the week. Stand by. Welcome back to Money Talk. Now here's Julia Lee with her week's sector spotlight, and we're ringing up the telcos. Julia, thanks for joining us.
Always a pleasure.
Now before we talk about telcos, because there's the important AGM Telstra meeting tomorrow, a lot of people might be worried about the market and what it's doing at the moment. Are you worried that this might be the start of something big and bearish, or is it a buying opportunity?
I get the question, is this GFC2? And no, I don't think it's GFC2. We're not seeing, I guess, a massive external shock to the markets. And corrections to the market are normal. In fact, we saw one just February this year where we saw a bit of a taper tantrum, where we saw bond yields rising quite quickly and the market taking a step back to absorb the new normal. Whenever we see a breakout into a new trading range, the market just has a bit of volatility while it gets ready for some, I guess, a bit more normal trading. So I think
people are taking profit and things like that, isn't it? They made good money. I'm a bit worried now. Take it off, and when the share price falls, I think, oh, I might buy it now. It looks a pretty good price.
I mean, someone said to me, you need that volatility to separate the professionals from...
That sounds like a professional saying that. Yeah.
But I guess it is an opportunity, and that's the point of the story. What we have seen is that this volatility has been caused by the pace of rising yields in the US, as well as the potential for a trade war. And we've seen President Trump once again coming out to say he's ready to slap more tariffs on China. And that's seen, you know, the futures, the US futures trading with substantial amount of weakness. But there's, on the other side, there's earnings season in the US, which has kicked off this week. So it's third quarter earnings season. And the forecast earnings growth is 19.2%. This is the 6 out of the last 7 quarters where we've seen double-digit growth. Yeah. So it's incredible strength coming through from the US. I guess still just watching what's happening with China and the US in case that does destabilise global growth, and especially in terms of that strong US currency and the yields in emerging markets and the volatility there, in case that spreads. But for the time being, this looks like another opportunity.
Okay, they're telling me we haven't got much time left, so let's go straight to the telco sector. You like a stock in particular. Let's start with that first.
Oh, so in the telco space, the reason why the telco space is attractive at the moment is that we are seeing a bit of a shift from growth and momentum strategies into defensive. But that usually means the telcos, utilities, consumer staples and healthcare. In that space, though, you know, we have seen increasing competition and rising costs. But one I like is Speedcast. Yeah. It
copped it a couple of weeks ago, didn't it?
It copped it bad, and that's because the energy space hasn't been spending a lot of money. Now, the energy sector's one of those sectors that constantly has to renew its assets. They have these projects in the middle of nowhere, and Speedcast is a global satellite company. So when you're in the middle of nowhere...
Makes mobile phones work out in the middle of nowhere.
Or data, more likely internet these days. So its clients are things like defence, cruise ships like Carnival, as well as energy. And I like Speedcast because I think that spending is going to increase in the energy space, and that's going to flow through to Speedcast in this financial year and next financial year, and that we're going to see a turning in the share price.
Before they wind us up totally, Telstra, it reports this annual AGM tomorrow. What's your view on Telstra? Is it heading up, or it's hit a plateau?
Look, I just think it's not Telstra's fault. I think it's the whole telecommunications industry globally. It's very hard when you have to spend so much money to invest in new infrastructure, and then every few years you have to buy a brand new infrastructure. I mean, we've had 2G now, 3G, 4G, 5G, and they're already starting to talk about developing 6G. So almost every 10 years you have massive investment in infrastructure, and things are changing. And a lot of those global telco companies, they're trying to diversify into easier type of industries, like content-driven ones. We've seen Comcast and Sky. We've seen AT&T and Warner globally. So look, globally, it's a difficult position. For Telstra, I think it depends on 5G. 5G is going to be amazing, not only because of the speed, but also the capacity. It's going to have 1,000 times the capacity. And I don't think we can fully imagine the type of products that are going to come to the forefront and the opportunities there. But the fact is that Telstra, mobile subscribers, they really peaked in FY15. So 2 to 3 years where we've seen mobile revenue sort of declining, so they need something else to replace it, and hopefully 5G is the answer.
Julia, we'll go for Speedcast and give Telstra a wide berth for the moment. Thanks very much. That's Julia Lee from Bell Direct. After the break, we're going to look at that unusual fund. Some of the best fund managers in the country are behind it, and the money's going to go to medical research. Stick with us. See you after the break. Welcome back. I want to talk to you about Hearts and Minds Investments. Now, it's a listed investment company seeking to raise $500 million that also has a charitable goal to give back plenty of money to medical research. Already $225 million has been put into the fund by some of Australia's richest families. Now, Gary Weiss is the Executive Director of Ariadne and the new Chair of Ardent Leisure, and he chairs the investment committee that has some of Australia's biggest names in fund management giving their stock suggestions, which includes Caledonia, Cooper Investors, Magellan, Paradise Investment Management and Regal Funds Management. I recently caught up with Gary Weiss. So tell us about this very interesting fund.
So this arose out of the Sohn Hearts and Minds Investment Leaders Conference that we've been running now for the last 2 years, and we've had some excellent recommendations that have flowed from the conference. And arising from that, there was a level of interest in the potential to harness those investment recommendations in the form of a fund that would benefit medical research while at the same time being an attractive investment vehicle for supporters. So we did a modest fund on the back of last year's conference, which went exceptionally well. And so we thought on this occasion that we would bring it to the market. Because we do believe this ought to represent an attractive investment proposition for many investors.
Okay, so for people who don't know much about it, Sohn, explain the history of Sohn.
Okay, Sohn is named after the late Ira Sohn, who was a trader on the New York Stock Exchange. He passed away at a young age of cancer, and his friends and supporters on Wall Street decided to get together and put on an investment conference annually in New York to raise money for paediatric cancer research. And so that conference has been going for probably about 17 or 18 years. It's been very, very successful. The fundamental basis for the conference is that it attracts some of the leading investment managers in the United States, and the proposition is that they're given a limited amount of time to pitch their best investment idea to the attendees. And it's off the back of that that the conference has achieved considerable following, both in the United States and internationally. And now the Sohn conference has grown internationally as well, so you'll find Sohn conferences in London and Hong Kong, Tel Aviv, San Francisco, and since 2016 in Australia. Okay,
so tell us the name of this fund.
It's called the Hearts and Minds Investments Limited.
And it's a LIC?
Yes, it is, yes.
Tell us about how the stocks will actually be selected for the fund.
Okay, there are two broad propositions involved here, Peter. 40% of the portfolio will back the top 10 recommendations of fund managers who present at the annual conference. The balance of 60% of the portfolio will follow the 3 highest conviction ideas from 5 of the leading Australian investment fund managers. So that's the broad breakdown of the portfolio.
Can you give us some names? Because I know my viewers will be very interested to know who's going to be picking.
Leading names such as Magellan Asset Management, Caledonia, Cooper Investors, Paradise Investors and Regal Funds Management.
In terms of the performance of this fund, is there a goal or an expectation of what this fund might do?
I would add quite clearly, Peter, the usual cautionary remarks that past performance is no guide to the future. But certainly in terms of the Sohn conference recommendations over the past 2 years, anyone who had followed the top 10 picks from those 2 conferences would have done exceptionally well and would indeed have significantly outperformed relevant benchmarks. So to cite the statistics for the 2016 conference, the top 10 stock picks registered a 45% gain from November through to August of the following year. 2017, the top 10 recommendations generated a 50% return. As I said, I do repeat, the past is no guide to the future, but it does reflect, I think, the power of ideas generated by the conference.
Okay, so how much money are you planning on raising, and what is the unit price?
Unit price is $2.50, and the minimum subscription that we're seeking is 200 million, and the maximum will be 500 million, and it will be hard capped at that number.
Tell my viewers who will be the big beneficiaries, because a certain percentage, I think it's 1.5% of the value of the fund will be channelled off into charities. Is that right?
Correct. So that will be done every 6 months based on the net tangible asset backing of the fund, as I said, every half year. The beneficiaries will be a range of charities. Each of the core fund managers will be entitled to direct where 10% of the donation amount will go. The board itself will also have a discretion as to 10% of the donation amount, and the balance of 40% will go to the Victor Chang Cardiac Research Institute.
Now, I believe some pretty well-known and well-heeled families have already stumped up money in advance.
They have, and we've had very, very strong support from a number of very prominent Australian families and institutions and foundations, and you know, I would be reasonably confident in saying that just from those sources alone, before going out to the public for subscription, that we will be very close to achieving the minimum subscription level of 200 million.
Is it right that $150 million already have been sort of pledged for this fund?
Certainly that's in the range, if not a little higher at the moment, Peter.
That's a really good start, isn't it?
It's excellent, yeah, and we are really indebted to those foundation shareholders who've given their support so willingly to what we think will be not only a very good investment opportunity, but also in the process directing what ought to be a growing level of funding for medical research in Australia.
Has a lick like this been done overseas?
Not that I'm aware of.
All right, well, we wish you a lot of luck with that, Gary, and I know they're lucky to have a person like you supporting it. But while I've got you here, there's been some news lately. You are now chair of Ardent Leisure, and it's a company that's had a few challenges in recent times, particularly since the Dreamworld tragedy. What's happening to the company?
The process of remediation of the two remaining businesses is well underway, Peter. There has been a significant transformation of Ardent over the last 12 months. Most significantly is a considerable strengthening of the balance sheet. We sold the bowling and entertainment division in Australia, and as a consequence of that, net debt has reduced very substantially from $233 million at balance date at the end of FY17 to just over $11 million at balance date for FY18. We have recruited a new chief executive for our US operations and well advanced in the appointment of a new chief executive for our theme park division here in Australia.
When Ardent was flying high, and they've had some good moments in their share price history, the jewel in the crown was seen to be the American expansion. Is that still the case?
Yes, I think we have a lot of opportunity in the United States, and under the leadership of Chris Morris, we're already seeing some of the latent potential of that business coming forward. The company in the operations in the US did falter for a period of time. They had negative like-for-like sales growth for nearly 2 years. We've now arrested that decline, and there is nothing that I've seen which would suggest that there aren't some very good times ahead for our US operation.
My last question is, when you started accumulating an interest in the company, did you think you'd end up being chair one day?
That was never part of the original plan, Peter. Our modus operandi is to buy into companies and bring a proprietorial involvement and focus to the companies we invest in, and usually that does involve board representation, which is something that we sought after we acquired a substantial shareholding. As you're well aware, that was rebuffed, and there then followed a highly publicised proxy campaign, which did result in me being appointed to the board. And then there was certainly the mood amongst the directors at the time that it should then follow that I become chairman.
Well, I know there's a lot of shareholders out there who are rooting for you to do a good job.
Well, we'll certainly do our very best, Peter.
Thanks for joining us.
Thank you.
And I should say the Hearts and Minds Investment LIC, its ticker code is HM1, and it will list on the 21st of November, so the building period will be before that time. That's the Money Talks for this week. Next week, we're going to be looking at to buy or sell on the interest rate jitters coming out of the US. Until then, I'm Peter Switzer. Don't forget, you can check me out each morning on switzer.com.au. Good night. See you next week.
This program brought to you by eChoice, helping thousands of Australians find the right home loan since 1998.